Good morning and happy 4th of July weekend to everybody. This is Jeff Scott, and this is my top-down review for the weekend ending July 4th. But since July 5th is a holiday, I'm doing it today on Monday of 2021. Again, my name is Jeffrey Scott, and my email address, should you want to reach out to me, comments, etc., hgsidoc@gmail.com. I titled this week A Chicken Little Market. And for those that grew up reading and watching TV, Chicken Little was the character that was always saying, the sky is falling, the sky is falling. And it kind of reminds me a lot about the stock market, because even I sometimes probably sound like Chicken Little, but this market just keeps going higher. And how long is a question. Eventually everything will come to an end. But I do feel a little bit like Chicken Little myself. But let's go forward and take a look. I've been on the road for the last 10 days. I got home last night, went to visit my daughter in New Jersey, and then just came back from Santa Fe, where I'm building a house. Used up a lot of my profits from the last 18 months, and I'm still not done with that house yet. But it's pretty exciting. The thing about dry heat is really true, because coming off the plane, we flew through Houston on the way back and then into Palm Beach. There is a difference when you don't have humidity. All right, enough jabbering. Let's go. This is for educational purposes only. Anything I recommend is in the spirit of education and should not be considered investment advice. I am a doctor, not a broker. I am independent. I pay for the tools that I use. I don't charge anything for anything that I do, unless I do a live in-person meeting, and I pay for all the tools that I have. Trading involves risk, and you and you are solely responsible for any decisions you make. When I do live education, it's been years. For a while I was retired, then I went back to a new business. And during that time, I did a number of live meetings where I called them Be Your Own Guru. And I've learned from a lot of smart people, many of which are up here, whether I read their books, went to their live meetings, attended online seminars. And these and others, I've taken a little bit from everybody, and that's what made me what I am. And I suggest that for you, it's not just me, it's others out there, much smarter people that you can learn from. And you take it all together and you meld it the way it works for you and become your own guru. I own a lot of software. I try to kill my desktop when I do these, but if you came to wherever I was trading on a day that I wasn't working, you'd see TradeStation and Thinkorswim up with numerous indicators, John Persons, Dr. K's, Sager's, Q, and then I use HGSI and EdgeRater. I'm an unpaid volunteer, and this is just education. The website for HGSI, again, no relationship, free 30-day trial here, and under investing strategies, you can see hundreds of movies. Stock patterns are cyclical, and this is sort of the Chicken Little phenomenon, where so often it'll feel like we're rolling over, and then we go to another leg higher. And I think maybe was it last week? I said that 2 weeks ago. I think I said that, and we took a leg higher. And then you have weeks like this past one where the market ended, and if you just look at the major indices, it certainly feels like we're going higher, but then we have a tendency to roll over. So it's almost as if we've truncated the top of this pattern. And every time we hit the bottom, you think about Darvas box, we go higher. Every time we hit the top, we go lower. And where are we at in this pattern? Closer to the top of the box. Now, eventually we're going to break out of that box. And is this the time that we go on to higher highs? You know, we've got new highs on multiple indexes, closing highs at least, so possible. Now, I still think we're living in this uncertainty, and that means I've got a lot of cash in my account. I also have smaller positions than I normally would have, and I've sold premium against many of my positions. If I'm bearish or bullish, more bearish or more bullish, I have additional trades. But right now, I'm sitting in this area where I want to believe the market's going higher. I did expand a few positions, but let's be honest. I left my house a week ago Friday. I've been on the road ever since, and it's hard for me to be a good husband and be a good parent and travel and sit at my computer all day long. Plus, who would want to do that? So I really didn't do much the last week, and my account reflected my lack of activity. If I look at the market review for Friday, I always like to get a sense. So you can see right away the financials have a lot of red. It is a mixed market at best. I do think that it's sort of a Dr. Jekyll, Mr. Hyde, whatever, Mr. Hyde, Dr. Jekyll, whichever way it goes market, because it's a different market whether I'm looking at indexes or looking at stocks. And you could see on Friday, the indexes, there's a lot of red on the futures. Now, we'll look at the closing on the ETFs, which look a lot better. There was perhaps some of this came after hours. Plus also I took this picture yesterday when the futures were open. So I'd ignore the futures. The stocks were closing values. Let's look at the major markets. Let me see if I can figure out which is the right one to look at. I think it's this one. And let's just maximize this, make sure it's a daily. I make that mistake every once in a while. All right, so here is the E-mini futures, and we're going back a year, and you can see a very steady run. And in fact, compared to back here, which was some sideways movement, and here again was sideways movement, we've tightened up. And look how many green bars in a row. Now, you can look at to further back and forget this bar, which is the futures overnight. 1, 2, 3, 4, 5, 7 positive in a row. 9 out of 11, 9 out of 10 positive days on the futures. Wowzer. Futures are strong and nice tightening up. This is a hell of a rally. Now, the problem with this rally, in my opinion, is this. Although volume did increase some on the latter half of the week going into the holiday, we're really low on the volume here. But looking at this, boy, I'm glad I have long positions and not short positions. Although selling premium is a short position. And if I really want it to be bullish, that was a pretty significant breakout from that line above my arrow point. Now, what's my target? Well, my next fib for trations right up here. And it's like 43, 64, 75. So I don't see another big move up, but there's nothing to say that we can't take that out. But on each of these fibs, we seem to slow down and think about it for a while before we break out to higher highs. All right, that's the S&P 500. But you notice the little white bar here on the futures. That means we hit an all-time high on Friday. Nasdaq Futures, also all-time high on Friday. Also a very bullish run here. Volume, not great. Perhaps not as bad volume as we see on the S&P, so that might be one difference that's favoring the Nasdaq 100 big cap tech. And in all these, look at the 17 has crossed above the 50, has crossed above the 200. A beautiful year for the Nasdaq, but like, you've had periods of sideways movement here, periods of sideways movement really from the beginning of this year until this round started in early June. So a nice move here on the Nasdaq. I look at the Dow Futures. Now, I read in a number of places, new high set on the Dow, and it must have been just a closing high because the prior high up here at 35,000 were nowhere close. But you could also see what happened on this day. This was a reversal day with a sort of a shooting star looking candle. The Dow, like the others, is in a nice uptrend. Has to be if you're getting up to all-time highs. Now, unlike the others, the Dow is still in a sort of a sideways move, and perhaps it's getting to that point where it's going to break through that. We worry so much about those 30 stocks. The Russell, if you want to talk sideways moves, the Russell has not made a new high since March 15th have been an awesome move, I guess, until the interest rates started going up, and the Dow, and well, the dollar alone for right now, but the Russell's really going sideways. The VIX, as you might expect, is down. It's not as low as it gets, but the VIX is pretty low. So a lot of complacency in the market. And the dollar broke out. Now, it had a weak day on Friday with a bearish engulfing pattern. It's still above the 200. The 50 has crossed above the 200. It's not a perfect formation here. Certainly one where failure in this area where my white line is would not be surprising at all if it even gets that far. So maybe we're going to get a respite coming on the dollar. If I was to flip this very quickly to weeklies, and really not even to spend much time on this, but to really look at the power moves that this market has had over the last, I guess you could say over the last year, because this is weeklies. And then look at how we're still pretty sideways on the Dow and very sideways on the Russell. Now, the other thing that we've been looking at on these weekly visits, and I look at every day, are the expected move charts. So let's take a quick look at those. Now, a couple of you emailed me over the last week, and I apologize for being late to get back. I'm going to go through my emails later today. So if I owe you a response and you don't hear it by Wednesday, please email me again. I had every intention of being good at following up on things, and I just got overwhelmed. I've got some really good things going on in my life right now. We all got our own challenges, but some really cool things, and I was occupied. So for those who are new, the green bar and the red bar is the 1 week option. Here it's the E-minis, straddle pricing. So in the straddle, let's say that you thought the market was going to move a lot, and you just don't know which way it's going to move. It's whether it's an earnings are coming out, or it's a Fed meeting, or you got some insider information about the FDA and a drug release. You could buy a call and you could buy a put. And that means here's your strike price, which is the close on Friday, and you'd be buying two options. Now, if you think about it, if the option moves to the top of the channel, then you were right on one of them and wrong on the other. You still lose money, because this reflects the price between the green and the red, the total price of that option. Now let's think of it a different way. Let's think about you're the person selling. And historically people make more money selling options than buying them. You're collecting premium. The green and the red represent the price of a at-the-money call, or not, excuse me, at-the-money call. An at-the-money call and an at-the-money put. So you're collecting the money from both options. You're guaranteed to win on one of them if you hold it to the close. Now, as long as it stays within this range, you make money. So the expected move is about, say, 67, 68% of likelihood based upon statistics that the price is going to remain between the green and the red. Now, if the price remains between the green and the red, who makes money? Person selling the options. And who's the smartest person in the market? Probably the person selling the options. So if the smartest person in the market is the one that's telling you the price of the straddle and setting the expected move for that week, who's smarter, the person buying or selling them? The person selling. So odds are they stay there. So we look at the E-mini. This was the center, the close on the prior Friday. And where did we close? Right at the top. Who made money on this trade if you bought the call and the put? Probably nobody. Certainly the seller did not lose because it closed right at the area of the expected move. So the stock behaved, and if you had bought a call and sold a put, you did not make money on this trade. You may have broken even, but you didn't make money on this trade. All right, that's cool. So the S&P behaved. In the prior week, look what happened. Had such a big move on Monday, and then it stayed outside the range. That is a very powerful move on the prior week, and the week before that actually went below the range. So although 68% of the time we're going to stay in between the green and the red, it's pretty remarkable the number of times of late that we have gone through this on some pretty big weekly moves. How do you play them? I play reversions to the mean. We talked about this one here when on Wednesday you see getting so far below that all I needed was an up close to get excited about taking out and going back into this market. And they have a tendency to revert towards the mean. So this is the E-mini futures, the Nasdaq futures on the week. Big move on Monday. And then really went sideways Tuesday, Wednesday, Thursday, and then broke out on Friday to all-time highs. So if you were long, you probably money on that straddle. If I look at the Dow Futures, it was a very narrow range. Sometimes I wonder about this indicator. The Dow Futures traded up, and as I talked about, it looks like the Dow Futures may have closed at an all-time high. And they probably did. This bar is close here. I guess it really depends where you put it. But basically the Dow broke out of its range as well. So a very bullish week, but it doesn't feel that bullish. Maybe it's because I was not trading much and I missed out on making money this week. Here is the Russell within the range on the lower part. Again, this is because we've got futures trading already on Monday. The VIX stayed within its range, and the dollar actually showed strength. And then what happened on Thursday, it closed above the expected move, and Friday it came back in hard. We'll see if that has any carry through. All right, so I probably confused you more than I helped you on that. Apologize. Rates, I like to look at certain things underneath the market. So rates on both the 10-year and the 30-year came back a little bit this week. That probably helps big cap tech. And falling rates are good for REITs, MLPs, utilities, people that pay dividends, and typically home builders. It's a crazy home market right now. Now this was interesting. Hard to see the red here. But the first thing is, look at the Russell 2000 in white versus the Russell 1000. The big caps set an all-time high. The small caps were actually down. And this is the AD line in white. If you look at the IWM, it's pulled back some, and the IWB is at all-time high. So there's a clear divergence favoring the large cap Russell 1000. If I look at the Nasdaq, look at what the Nasdaq did with Friday's move. The Nasdaq closed all-time high on price, all-time high in the AD line. So referring back to Chicken Little, it's hard to be bearish, at least in large cap tech, when you see that AD line and the Qs. Now, a little bit more sobering is the NYSE. The AD line is in the dark white, and you can see the AD line actually turned down this week, and you can see my Qs just breaking out. So you can clearly have an overperformance of the Qs, the large cap tech, where most of the other things turn down. The other thing that's turned up with the rates falling, this is kind of like the inverse of the rates, is TLT. Now, another place where I saw some weakness underneath the indexes, and these are weekly charts, all-time highs in the market, then why did my stocks above the 200, stocks above the 40, and the 12-week new high, new lows, or 3-month new high, new lows, why did they all ease off? So again, you got this concept to me of divergence between market leadership and the major indexes. So a smaller and smaller and smaller piece of the market is leading us higher. More evidence of that, massive new highs on the daily McClellan, and we had a zero line break failure on the oscillator and continue to have divergences. Boy, that is not supporting higher highs. So again, the evidence continues to wait, whether it's volume, whether it's breadth, whether it's the McClellan, that we are having divergence, but we keep going higher. And as I've learned with the divergences I watch on the trade station that we'll look at, you can go on much beyond where you think it's going to stop going. And look at this vertical. Vertical lines never end well. So are we near the climax? Could be. No one says we don't have a few more weeks either. And you could see really no breakout of oscillator summation index on the weekly either. Current buckets. Now, all-time highs, everything feels great. The market's wonderful. Why are half the stocks in the S&P 1500 running below the midline of their Bollinger Bands? Why? Because there's weakness underneath the indexes. Is there a Hindenburg omen? No, there hasn't been a real Hindenburg omen for months. There hasn't been a confirmed one on this 6-month or 4-month list here. And if you look at the components, you don't have enough new highs. Well, you have plenty of new highs, but you don't have exuberant new highs, and we have very few new lows. So no evidence of a Hindi on the Nasdaq or the NYSE. Market tone, we look at the Woody indicator. These are all the major indexes with their funny symbols from HGSI, and you could see that almost, the majority are green. That's bullish. There's no red here at all. So the markets are mixed to bullish, more leaning on the bullish. Now, here's another problem. Let's take your fundamentals from a week ago and let's look at earnings per share rank, relative strength rank, group rank, and let's look at performance based upon each of those or combine them into ERG. So each of these are 0 to 99. This is 0 to 279. And what do you see? You see on the left that you have a larger area of negative than positive, which means there was a negative feel to the market this week. Yet we had all-time highs. You can see I don't ever look at the first 3 or 4 because there's hardly any stocks. So I probably start here, and I would probably end in this range. And what I see is, although there wasn't a big up move, higher ERG did better than low ERG. That's good because I'm a higher guy. EPS rank, every EPS rank decile, when I look at the market as a whole, and I think for this analysis is probably stocks $2.50 and 250,000 shares, every one of these is minus, every group. But the best performance of the bad is in the stocks with the high EPS rank. When I look at relative strength rank, the same thing, where some of the high relative strength ranks outperformed. Group rank, really no pattern here. Stocks that were accumulating the week before actually outperformed. Stocks that were distributing the week before, not so good. So I look at this and I go, where's the breadth? All-time highs shouldn't look like this. Then I look at various groups, watch lists that I follow. Some are bearish, some are bullish. There are very many more bullish than bearish. And notice that you've got a lot of red performance here, telling me that over the 5 days, Monday through Friday, a lot of these groups, which include bottom fishing for nuggets, best of Woodward and Brown under 15, high relative strength, EPS in an uptrend, some of these very bullish groups just blew up. Now, up here, the S&P 500 was up 1.5, at least on this. I think it was 1.7 on the futures. It was up a lot. In green, you can see my buy watch performed just like the S&P 500. My filter buys, which is a little bit tighter, I was up 1.14. My current holdings were up a little bit, 0.5%. I didn't do much trading this week, unfortunately. Fortunately, what's surprisingly is the IBD, Market Smith, the weekend review, on the IBD live watch list from Friday, the IBD 50, all underperformed this week. So again, where's the breath? Where's the bull? Now, this one here had me scratching my head. Because again, let's look at the Woody indicator. I've got the major market S&P sectors here. And I come down here and they're all green. 1, 2, 3, 4, 5, 6, 7. 6 are green and the average is green. And that's bullish. But everything else I looked at this weekend looked differently. I scratched my heads, and then I realized this is on the S&P 500 because the Q tools are based on the 1500. So what happens when I broaden out the sectors? On Friday, I had one sector positive. 91% of sectors were negative. 74% of industry groups were negative, and 63% of stocks were negative. That was a deterioration substantially over two-day performance. It shows you how strong Thursday was. And then if I look at over on the week, at best it was a mixed week, but on the S&P 1500, on the 5-day run, only 2 out of 11 sectors were positive. Don't even look anything close to this. So as we go further down the size of the stocks in the market, we got weaker and weaker performance. And I think that's the message of the day. Don't be fooled by the indexes setting new highs. There's some underlying weakness, and you may have seen some in your accounts. Over 10 days, market's been super strong. And over a month, not so strong. So are we going back weaker? Did we peak and are we going down? I don't know that. I don't think so. But, you know, we looked at the volume being kind of piddly for all these new highs. We looked at the breadth showing evidence of concern, the McClellan showing evidence of concern. And clearly between my buckets and the S&P 1500 sectors, there's weakness in this market. Again, over 2 weeks, everything is green, meaning every sector is up. But when I look at the red over the last 5 days, not so good, and it was 1 in 10 on Friday. Now, if I rank the sectors by performance on Friday, you can see there's no real time because the market's not open on Monday. The leading is information technology and utilities. The laggards was the leaders. I mean, energy has been a leader. OPEC's been meeting. There's been a lot of messages that are coming out of there. If OPEC holds the line on increases, they can convince the non-traditional OPEC players to participate, then oil probably will go higher again. So if I looked at just IT and utilities, these are the industry groups that are in IT and utilities. And as I look at the one-day performance, I looked at the clear out performers in industry groups with water, semis, internet, and data processing. So I said, let's limit a top-down analysis to the best performing groups. And then these are the stocks that were in those groups. And then this list here, which is probably hard for you to see, are some tickers that are considered undervalued fundamentally. Now I'm a technical guy, so I run those through my charts, and I'll be the first to admit that there wasn't one that really stood out and hit me on the head. Now I did find this one as a turnaround play, ADS, interesting on fundamentals. So I actually put it into the Vital tool, and then this tool here, the edge, is limited to the S&P 1500. Vital can pull up peers anywhere in the world in any index. So it gives me a much bigger list of opportunities. And it shows me the earnings per share and revenue strength on this stock right here. At least, I guess these are projected going forward. The blue here is showing me that it's undervalued. This shows me that unlike the rest of the market, you got 2/3 are actually above on the day Friday. This shows me the amazing earnings per share growth on this stock here, 737.3% projected, I guess in the next quarter, and or this quarter, and then you can see the revenue here. I guess this is the reporting. So big earnings move. The stock is called what? Just ADS. Now I can take this entire list, and when I hit the peer analysis here, it's going to give me, again, the fundamentals, and then these were the ones that were similar to ADS that were considered undervalued with good earnings. And you can see the earnings growth coming in is just huge. A lot of turnaround plays. Canaries in the coal mine. Well, if I've said over and over again that big cap tech is doing well, you know that the Canaries had a good week. They didn't do much, but they did okay compared to the rest of the market. And notice how, as the Canaries have fallen here, those are still lower highs, but we got higher lows. Look at how relative strength has improved. Look at the series of pocket pivots. So the Canaries are interesting. Know your news and earnings. I think for me, obviously Monday's a holiday. Tuesday's got a few things, but it's that FOMC minutes on Wednesday afternoon I think is going to tell us a lot. This is Econoday, not Bloomberg. I forgot to change that. My apologies. Obviously not trying to hide that that's Econoday. And on earnings, it's a quiet week. So impressive week for the S&P, gained 1.7, 7 record closes. Top 4,300 with ease. Nasdaq was up 1.9. Interesting. I just showed you all this weakness, and look how high the indexes are. Dow was up at record close, and the Russell fell 1.2%. Now, in the Russell, again, telling, growth rose 2.4, value just 0.4. As I said, broader, the markets appear weaker. We're still in a seasonality strong period, but I think we're waiting for the Fed minutes to give additional clues as to timing of hikes and tapering. 6-month review, you can see the performance. The market has tightened up, where for a while the Nasdaq was lagging, and now you're really 3.2% between all of them. Now, I always don't know if I should share my stuff or not share my stuff, but I think, there's a guy that's posts on YouTube. It's called The Real P&L. He sells you some options trading. I don't sell you nothing. And I think it's important that, and he calls out all these people that are liars. I think it's hilarious. The people that make more money selling education than they do trading. My basis for this year, I said last week, I'm just going to use $2 million. I started with 3.1 in my account. I took out $2 million in the beginning of January for taxes and for a partial payment on one of my houses. Then I put some money back when I sold the house. So I'm now sitting in the account with 313. I'm up 1.4. So really that means I got 1.7 net. So I'm just calling 2 as my basis. So on a basis of 2, with a up 1.489, about 1.49, among friends, let's just say I'm up about 75% on the year. That's real money, real trades, not a demo account. I mentioned that I was impressed with the weakness underneath the major large caps, as we're seeing rotation and whipsaws as different elements take control. I'll continue to be nimble, trade the market we get, like the title character in the old fable, Chicken Little. The sky is probably going to fall hard someday, yet at least the major indices suggest that we're not done going higher. All right, enough of the PowerPoint. Those that have been with me a long time know there's a reason for that PowerPoint, because I'm a top-down guy, and how the market goes really defines more likely how I go, not my stock picking prowess. Spiders you can look at here clearly in an uptrend with higher highs and really a big breakout this week. Now this is a area of resistance which you can break through, but that's one of the Sagar's things. But just showing the power of the S&P. Look at the move of the Qs breaking out above resistance. The diamonds at a prior high level here. This is going back some. And then you've got the Russell. Now, one thing to keep in mind when I was looking at the Dow highs, I was looking at futures. And futures and the cash markets are a little bit different. You can see the Russell's the weakest one. Not only did it have a bearish candle there, but it's nowhere close to prior highs. I always like to go into TradeStation, and I like to look at, it's in TradeStation. One more. All right, I have to look at a few indicators. And again, I'm going to ignore the last bars because we have some trading right now. And what's also interesting is, and I don't know how to explain this one, to be honest with you. Thinkorswim is showing right now the Nasdaq is at 14,701. Net change is 0. And TradeStation is showing the same thing, or at minus 13. So I'm not sure what that's taking into account. The futures are flat. Just leave it at that. Look at here. You see a lot of small numbers on the percentages. So let's look at the S&P 500. And if you've been with me before, you know I'm looking at a series of things. I am looking at number one. Are we in a John Person buy or sell? I got a daily buy, a weekly buy, and a monthly buy. Awesome. Number two, what's the color of my paint bar? Green means I should be long or hold. I should not be short. Red, I should be shorting or holding. I shouldn't be long. And blue, I can do whatever I want. Green, I think that's a blue and that's a green. Very bullish. Number three, do I have any of these red dots that suggest divergence? When I look at the S&P 500, I don't see a red dot right now. That's pretty awesome. Number four, where am I at in the envelope? I'm up at the top. And that's bothersome perhaps, but not really, because I run up the top constantly in a strong market. Number five, where am I at on my Laguerre RSI? I find some of the best up moves occur when I flatline at 100%. So I'm not going to worry about that, even though it's technically had a down arrow. Then I come down here, I look at the weekly bongo, which is the middle green dot. My long-term trend is bullish. That's great. And then I finish my analysis by looking at my high jump at 77.59. I have room to go higher. That's a level of extension. That's the E-mini. The Dow. We got a Laguerre RSI and a person's fired on the same day. All bullish, all green, not at the envelope, no divergences. And the only thing that's bad here on the Dow is it hasn't turned its weekly bongo. That'll probably go this week if the market is up. The Russell. Here's what's different. Notice that you've got longer term, you're okay, but shorter term, you had a red candle on Friday, so not a very powerful candle, and you're in a sell signal. Bearish here. Now, I forgot to look at the Dow high jump, so very quickly, Dow high jump is at, nothing to worry about, 59. And then lastly, the Nasdaq. Nasdaq has had a big run. It's currently the leader. It's at 78.91, so it could still go higher on the high jump. It's got MACD divergences. How do I know that? Because I see the red dots. How else? Because I got much higher highs here, And on the MACD, I'm nowhere close to the prior. So there's clear divergence there. Bond goes green. Overbought more than the others, but none of which are in I have to fall zone. All right. If I want to look at the dollar, which had been strong, we're going to try to ignore the last bar. The dollar, is it rolling over here? It might be, but let's look and see if I got any signals. Look at this. What happened? Look at the HJ 100%, and the HJ pulled back. So it hit that 100% on the high jump, and what do things do when they hit 100%? They always pull back. So maybe we're going to get a little bit further move to the downside on the dollar. If we do, that would be supportive for gold and silver. Hard to be a gold bug right now, but maybe it's the time to start thinking about it with a new Lagarde signal and a new John Person signal. All right. So what I've done thus far for myself is I'm worried about the market from the perspective of the major, the divergences and the what's clearly not as strong underneath as it is on the indexes. But I've also learned the indexes are important and the indexes look like they still want to go higher. Now I jump into HGSI, I start in major market analysis. I bring the 39 things that I have in my major markets plus, I put my top down, and it ranks them about what was the strongest on 5 days versus 1 day with a little bit further. Dow was the highest on this look, although it wasn't the highest 1 day performance. I'm doing by raw combo here. Commodities were okay, which is interesting. Mid caps, Dow, IBD 50 breakouts, Nasdaq 100s. So this is kind of a okay look for a growth stock investor, and perhaps that's why I made a little bit of money this week, although I didn't make very much. Again, I wasn't actively trading. Let's look at some of these major indexes here. As you can see on the weekly, I'm not going to spend any more time on it, a fresh breakout on the S&P 500. If I go and I look on the Dow Jones Industrial Average, again, a new person buy, and looks like this one wants to go and challenge prior highs. If I look at the Russell 2000, at least the IWM, this is the laggard of the bunch, really in a sideways move. If I look at the Nasdaq Composite, like the S&P, a nice breakout this week over prior highs. So again, all-time highs, hard for me to feel very bearish. At some point, the sky will fall. I just don't know if it's going to fall yet. Let's look within the NASDAQ. I like looking at the IBD 50 fund because this reflects a lot of portfolios. Now, isn't this interesting? This is the chart for those of you sitting at home saying, he's telling me the market did great. Then why did I not make money on Friday? Well, this is why. If the IBD 50 managed ETF has a mobile breakdown, 3 days down in a row, a person sell signal, and a kahuna to the downside, it's hard to believe you made a lot of money if you're a pure IBD 50 trader. Obviously, there's winners and losers in 50 stocks. You can see on the weekly sideways. So like the Russell, run up and sideways move going back to the beginning of the year. That's interesting. How about, let's compare that with the FANGs. A little bit different picture. Approaching, at least on this ETF, either all-time closing high for sure, because those are all red candles. Be interesting to see if big cap tech can take us to the promised land, or when it rolls over, does it take the market with it? Biotech, these were good buys down here. We talked about them. Has broken out. Talk about good buy. How about Regeneron when we talked about it three weeks ago? Biotech looks okay. Red candle high, somewhat bothersome, but not at the high jump. Semiconductors, we know that they were one of the better performers on Friday, and you could see a big move this week here, all-time highs on semiconductors. I assume it's all-time highs. I'm not really looking back. Let's just go look at quarterlies before I open my big mouth. Yeah, I think so. But it doesn't go back to 2000. Let's look at annuals. I don't know if I go back to 2000. Well, at least in the data I got, multi-year, if not all-time highs on semiconductors. What else can I look at here? I can look at some of the ARC funds. They have their moves. ARC Tech, new sell signal, but it's above the 50. FinTech, a new sell signal. Genomics, holding up, but red bar. Innovative, a new sell signal. Israel, holding up above the 50, but not doing much. Next Gen Internet, a new John Person sell signal. Space, sell signal on Thursday. So hard to believe that you can do great, being a growth stock guy right now, if Kathy Wood is doing so poorly. Now, I don't pick on Kathy Wood. I'm sure she's brilliant. I'm sure she makes a ton of money. Kathy's handicapped, and I don't mean the ones that get to board first on the airplanes handicapped. She's handicapped because she's got to buy within a theme. When your themes aren't working, you're not making a lot of money, and it's not her theme. If her theme is genomic revolution, and those stocks are in a short-term bearish market, she's not going to perform well. Speaking of not performing well, unfortunately for my son, who's learning a lot of lessons about in the market, despite a very high relative strength rank, which is interesting, Bitcoin's at GBTC is just doing nothing sideways after a big, big, big sell-off. All right, so now I hope you're feeling, and if you agree with me, that this market may not be as strong as the indexes tell you, but it's still more bullish than bearish. So let's pull into the industry groups here, 07, hit my warehouse view, and you can see I've got 174 groups. If I look at those by 2-day force, I could see I've got 40 of them are to the upside. It's not a lot. And 27 are to the downside. Again, more information that tells me something. It tells me that this market is not a rip-roaring bull, despite the near-term all-time highs on the major indexes. What's not working? Sporting goods like Hibbett have been doing very well. Pharma, banks, REITs, medical devices, real estate, casinos, home products, mortgage finance, oil, IT, cruise lines. Now, as we look through them, they all have modest declines on Friday, except for sporting goods. Yeah, and a lot of these are the traditional groups that I like to play with. 5-day down, more intermediate. I got 50, 5-day up, I got 49. So if you didn't believe that the market's mixed, that should tell you as well. So let's just leave the bullish hat on, not uber bullish, not awesome bullish, not everything's going higher bullish, but let's just leave the bullish hat on, because right now the indexes are more bullish than not. So if I highlight anything, so I'm ranking by 2-day force, raw combo brings a momentum to the top. And let's look at advertising and marketing. I right click, then left click, change the index group. And I can see right away that I'm not going to spend any time here. Why? Only one stock is above the index, and that one stock was up 5 days, 432%. I don't know if Marin Software is the latest and greatest meme stock, but I can right click, more info from web, FinViz. It'll open up on another monitor, of course. And let's just look down here. Meme stock surge. I don't play those. Maybe I'm stupid. Feels too much like gambling. That was the only thing above the index, so I don't care about the rest of the group. Precious metals. Now, this is interesting because they've been weak. Are they telling us something new as the dollar seems to perhaps be peaking? Don't know, but we're buying off the 200. I'd be looking for some momentum here, but I wouldn't be jumping in without something. This is Newmont, one of the best. Here's Barrick Gold, even worse, well below the 200. Gold Fields, Ashanti. Do you see anything there that's saying, buy me, buy me? I don't. I only like to look at the ones above the index. Here we have aircraft parts, TAT. Well, something happened here. Are they being bought? Do they have earnings? I don't know. More info from Web. FinViz. Open right up. Again on a different monitor. Thank you very much. Honeywell deal. Lots of partnerships. Again, I don't know anything about this company. It's hard for me to buy this pattern. The stock went from 6 to 10. You know, I've been doing this long enough that my expectations, but who knows if I'm right or not. I certainly don't claim to be anything that I'm not. My expectations would be that the stock may go up and may go down. My guess is it does this. And then for something real, it will run. I'd rather buy it on a secondary breakout than to chase it over here. But then again, if I'm wrong, which is very likely, I'll just miss a great opportunity. I can't buy something that moved like that. I can buy it, I just won't be sleeping good. Yes, it's a Bible gap, but it's way too gappy for me. Raytheon, you know, awesome earnings per share growth. Turnaround because it's been negative. Pull back to the 50. Why isn't this on my buy watch list? It probably should be because I don't see any momentum down here. I see no green or blue showing up. But this is interesting. Here's a chandelier stop. Interesting. I may want to look further at that for my own. And then here's the index. Biotech. Here's another one of these stocks that has a big move up on news, I'm sure. Not much in the way of fundamentals. I don't know anything about it. I'd rather buy things on pullbacks than massive breakouts. I think last week we talked about, maybe 2 weeks ago, we talked about genomic tests. Maybe it was last week. I think it was 2 weeks ago. And I made a comment about how going forward, they're going to be interesting, the CRISPR stocks. And then the next day they gapped up on some positive news. Nutella is one of them. This is probably a long-term play. A couple of Bible gaps in a row. Look at the volume that came into it. I'd rather wait for a pullback to get in. I'm not sure I'm going to get a pullback. I mentioned Regeneron. Yeah, of course I gave you Regeneron, 3-4 weeks ago. And we got into it before. We got into it down here. And a much better buy perhaps here from a risk perspective. But Regeneron has done great. Still looks good. Editas, this is another one of the CRISPR stocks. Not quite as run as far as Nutella. Novavax, eventually they're going to get a vaccine approved, but not yet. Amgen had a new awesome cancer drug approved, attacking a target that nobody else has successfully got the drug to market for. But Amgen's a big company and it's a sideways stock, hard for me to get excited. Cassava, I don't know anything about. I wish I did. Here's that pattern I mentioned before, a big run up, let it come down and take the next breakout. Iveric, this looks interesting. I don't know anything about it. For Optotech, novel gene therapy. So it's another gene therapy company. And here's another CRISPR company. So some of these look interesting. Moderna, I probably led you wrong on. Probably should have bought it in droves on this pullback. My problem with Moderna is not its short-term fundamentals. They're to die for. My problem with Moderna is it's a $94 billion company. Gilead is a big biotech. It's $86 billion company. Gilead single-handedly did more in its acquisitions for HIV than anybody else. And then Regeneron, I'm just curious, what's its market cap? 62 billion. So you got Regeneron and Gilead, two of the big pharmas out there, have market caps that are much smaller than Moderna. So Moderna's issue is it a one and done with COVID and you don't want to be long this for the long haul? Or, as I'm reading in the scientific literature more and more, are they going to be using this technology on cancer vaccines? A lot has to be proven, but it's an interesting story. Look at the relative strength, 96%. I want it on a pullback. Translate Bio broke out. Alexion's a takeout. Let's see if there's anything else that looks really compelling right now. Biomarin, is it getting cheeky here and getting ready to break out? Might be another thing. Now I'm just going to give you a little one. I'm doing this mostly for my ex-favorite neighbor. She's not my neighbor anymore. That's why she's my ex. Still one of my favorite people down here. Ocugen looks like garbage. Ocugen, it has the U.S. and Canadian rights to a vaccine, a COVID vaccine. COVID vaccine is an Indian vaccine, and late Friday after the market closed, it came out with safety and efficacy, and it was pretty amazing. Its relative strength rank is fine. It may play on it. The problem with Ocugen and why I might use strength to whittle down my position, which I've been in since for about 5, is that I'm not sure we're going to need it in the U.S. Canada needs it, and this thing only has rights in U.S. and Canada. India is probably going to be a big deal, but they don't have rights to it there, as I understand the company. Large pharma. Is it time to get back into these? Pretty nice looking chart for J&J. 2 kahunas in a row, a bunch of pocket pivots, person buy, breaking out above the 200-day moving average, and a reversal, not just the PSAR, but the chandelier stop. Weekly bongo turned green. Some earnings per share growth, which is good to see in a big pharma. 2.4% dividend. I like J&J. AbbVie, kind of like the biotech and a big pharma combo. They got a pipeline. They got some patent risk coming, but they also pay a 4.3% dividend. I like this one as well. I like it better if it takes out its chandelier stop, so I might put that at my buy stop level. Eli Lilly already breaking out. Merck & Company further down in the pattern. Pfizer, is this a good buy point? They got a vaccine. I don't for a minute believe that dividend yield is real. Let's quickly go look at that and prove it on FinBiz. Other monitor. $1.56, which is 3.93%. Nothing wrong with the 3.93% on a blue chip, mostly sideways. I like AbbVie and J&J better. Back. Internet media. Well, here's some of these leaders. Google, breaking out just like the S&P and the Nasdaq. Good to own, hard to buy a lot at $2,400 and change. It's a good play to me for bull call spread if you want to play this. Facebook, all-time highs. Look at this. Tell you a funny story. I'm better now, but I used to be really bad at shorting. And I was bad at shorting because I'm bad at shorting because I get nervous and I take my profits way too soon. I remember I got into Facebook. I think it was probably closer to 13. Yeah, I got into Facebook. I think I had $60 puts, and I lost money on them. So they had to be. I probably got into Facebook here, and then it sold off. And I remember I let my puts expire, and I got put the stock. So I never actually went long Facebook. I went short puts, and I got put the stock, and I'm still holding that stock. Facebook has really to me, defied the odds. Every time it's down, it's up again. Great time was to buy it back here earlier in the year when it broke out above the 50 from a downtrend. It's yellow, meaning it's got intermediate relative strength. It looks great. I already own it, so I'm not buying more. Snap, Twitter. You notice these are all above their 50-day moving average. Here's one that I like. Weibo. WB, I used to own it. Negative thing about this, it's Chinese. I know Kathy and I know others don't like Chinese. And boy, oh boy, if you bought the Diddy IPO, I bet you're not going to like Chinese on Tuesday either if Beijing has really removed their app for the company that's a Chinese ride-hailing company. But I like Weibo here. Sort of in the, is it, it's an early buy. Is it a cheap buy that Minervini talks about? But I had two pocket pivots. I had a kahuna off the bottom. This was a better place to buy it. Just looks like it's breaking out here. It makes money. Just it's a Chinese stock, so take it with a grain of salt. So who's a game play? Broke out on Friday. We're at what? A little bit over an hour. That was number 7. Let's see, infrastructure. Again, how do you not like a market when Microsoft is a leader? I mean, look at this weekly chart. Woof! I got some. I hope you got some. And what a nice little cup handle breakout, maybe. If I want to, let's see if they even call that. I'm sure they don't on Market Smith. Did I kill it? Nope, here's Market Smith. By the way, here's Weibo on Market Smith. Nice earnings per share growth. Yeah, breakout from a cup. Microsoft, great earnings per share growth this year. Is it expensive? Yes. How about Apple? Also breaking out. What I'm telling you, this is led by big cap tech. I'm not kidding. Microsoft looks great. Oracle, big up move. Pull back to support, breaking out here. Fortinet, ServiceNow. I own some CrowdStrikes. Let's look at that box. Yeah, CrowdStrike had a big run. Now it's just consolidating its gains. Consumer finance. That's a takeout. MasterCard and Visa, they look interesting here. Maybe MasterCard's at a better buy point. Good earnings per share growth. Visa, I mean, they both look interesting here. I wouldn't have an issue with either of them. Steel and raw materials. These stocks have gotten hurt, but they look like they're ready to run again, don't they? Kind of loosey-goosey, but in an uptrend. Right below a chandelier stop, had a new person buy signal come in. Take out the chandelier stop, I might want to buy some Cleveland Cliffs. Oops, I already bought it. Hopefully it won't be a bad thing. And then if you want to look for some yield, you can look at the MLP space. Kinder Morgan, 5.7%, pull back to the 50. This looks like an opportune buy point as well. Now, I'm getting tired. You're tired of listening to me. Let's look quick at my buy watch list for the week. Not all these are buy me right now stocks. But let's look at what we got here. Apparel footwear, VF Corp. Look to me like it's breaking out here. Well, it's not breaking out yet, but it's breaking out of a pullback. Just broke above the 50-day moving average. Application software, Aspen, I liked last week as well. Is it ready to go? We'll break out from a squeeze on Thursday. Got pocket pivots, kahunas, new person buy. I think so. I like this one a lot. Aspen Technology, it was an older company, went private. It's back on the market. Another software company. I know Cerner well because I sort of compete against them in some markets. Pull back to the 50 and a breakout perhaps coming. I like Cerner. Banks are lower down the list, but there were a couple banks I liked. Biotech, I'll show you some biotech already. This is Rocket. I just like what it's doing here. You might put it on a watch list and see if it breaks out. Regeneron, we already showed you. And I like Biotech. This is another vaccine play. This is Pfizer's partner. Another crazy valuation. Give it a nice flag here. A breakout above the PSAR might be interesting. Amazon, my biggest holding, so I'm speaking my book. Prior highs. Broke out of the top of the box here. You know, do I now have, and maybe I do I now have a new box? I'd be okay with that, to be honest, because I own it for $450. I want to break out of this thing. It should break out. You got the transition to the EO space. It had a mobile breakout, a new John Person buy. Got to clear that before me to believe all clear. Earnings are coming July 29th, and I think that's a heads up about a lot of things. Earnings are coming. A lot of things we already talked about. Tuscan Holdings, I don't usually go chasing these SPACs right now. This one looks very interesting. They are buying, they are merging with or they may already have merged with a battery company. And what makes this battery company interesting, Microvast, is that they've actually got batteries, I think, in Korea and trucks working already in EV. So I think that was an interesting play. And look at this. A Kahuna, mobile breakout from a squeeze, breaking out for some consolidation. Here's that pattern. Don't buy this run. Buy the breakout from the pullback, and that's what you get right there. I think on that note, I'm at a point where I'm getting tired. United Health looks interesting. Pull back into the 50. You know, this is where I like to buy things, especially for mobile breakout from a squeeze, a person buy, Kahuna. You can look at the rest yourselves. I think we have market risk here. I think we have market risk that the indexes are going to continue to pull it higher to a point. I do think at some point the market's going to say it's time to correct. I'm not saying that time is here. Bitcoin's up a little bit. Futures on a holiday will close soon. They don't mean much to me. So on that note, I'll let you freeze it. Take your own little picture. And while you're doing that, let me just talk about this for 1 second. One of the great things about HGSI is this warehouse view, where I can look at who's got a new HGSI, a new John Person signal. In my buy which, I only have new buys. I've got some new weeklies. A stock like Aspen has a new person signal on both daily and weekly. That's pretty exciting. Notice I've got very few that are in weekly sells. They're not usually the ones I'm looking at. Now, a lot of people go, but Jeff, you sure should make money. How many people that you listen to and watch their videos share their P&L with you like I do? How do you follow that many stocks during the day? And that's where I'm going to finish. I follow them 2 ways. Well, follow them in my head, which is not a good way. First thing is I use radar screen, which allows me to have all kinds of indicators. And I probably got 800 symbols here. And during the day, these signals are going to do various things and let me know what's going on. I'll know intraday is anything breaking out that I need to go look at. Don't know anything about WTRG, so let's just show you how I use radar screen. First of all, it tells me it had a breakout. So it was probably in a downtrend and broke above resistance. It is a pullback buy. So was it a pullback? Go with flow just means that it now developed a new uptrend. So let's just look at what this is, WTRG. So stock was in a pullback on the weekly. Little gare sell. Look what happened on the daily. On the daily, on Friday, it had a lot of buy signals, including John Person buy and took out downtrend line. Now, is this the best stock out here? No, it's not the best stock out here, but it's something I might look at. So I use radar screen, and let me stop this for a second because I don't think I updated it yet. All right, here is how I watch during the day in Thinkorswim. I put my watch list into a market watch. There are really cool things I can do with this. I can, see what I'm looking for. Hold on, I'll find it, I promise. I can detach this. And now I can move this list and stick it on another monitor. And I can be watching it all day. I can build in alerts. But I'm able to take the stocks that are in my buy watch list and I'm able to look for new bullish signals that I might like to use for purchasing. A lot of these you've seen before. So on that note, I'm going to say goodbye. Trade safe. Hope you have a wonderful holiday Monday. And we'll see you next week. Oh, for people asking about the computer, my friend in California, I'll reach out to you today or tomorrow about the Dell. It's still available. You can have it. The Alienware is still available. The person who wanted it changed their mind, which is fine. It is clearly a desktop replacement with a 17-inch 4K monitor. You don't need an external monitor. It's too heavy to take on the road for me. That's why I'm selling it. It's an awesome i9 computer to the max. Y'all have a great week. Bye, everybody. And thanks for watching.